Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. This video is on the KS early warning system to detect stock market and crypto crashes. Let's run the numbers. We can see in the last trading session, Russia came up, China went down, as did Finland, the US, Canada, Brazil. We've got some green, but China is quite red. For the US markets in the last session, all sectors went down. The worst performing was energy, followed by financials, industrials. The best performing was healthcare, information technology, and consumer discretionary. Turning to the major market indexes, we can see the Nasdaq came down a little. Bitcoin rallied, the S&P 500 retraced slightly, the Dow Jones Index decreased, and the Russell 2000 also decreased. We can see the market's fear gauge, the VIX, has been oscillating up and down. It's basically on a downward trajectory. That means fear is leaving the market. However, we've had an uptick recently in fear, which has been met by some optimism. We need to keep our eye on the VIX to make sure that the VIX does not trade in this area from 22 to 24. Any sustained uptrend in the VIX is problematic. For example, going into the last crash, what we saw is the VIX exceeding this downward price action. Then it spiked, and between the 14th of February 2020 and the 18th of March 2020, the VIX increased 538%. This is what a pre-crash looks like. We have to make sure that we're alert that the VIX doesn't get out of control and leave that particular range. We're keeping our eye on it. Looking back to the current VIX, we can see that price action, VIX action, is okay at the moment, but we're aware that there is an increase in fear entering into the market. It's important to remember this quote: deal with problems when they occur, not before. Getting ready for a crash is always a bad idea. It's a very costly mistake. Just keep your eye on the issues that can lead to a problem. It's also important to be aware of the interplay between stocks, bonds, and crypto. As of 2020, the end of 2020, the bond market was worth 128 trillion, stocks 95 trillion. These are global figures. Crypto around 2 trillion. What we're looking at is that when the market gets scared, there's a flight to safety from stocks and crypto into bonds. That raises bond prices. When we have the opposite, when we think that the risk is off in the market and people can speculate, money comes out of the bond market into crypto and into stocks. Giving you a way to understand how to detect these things, we look at bond prices through the TLT. There are other measures we look at as well. This blue line started really spiking. Think about the VIX. It started spiking long before the actual crash occurred. We can see this incredible movement up in bond prices. That is something that we need to look at. Bonds and yields are inversely related. As bond prices come up, yields come down. We need to look at this too. There's a confluence between these two things. Looking at Bitcoin compared to bonds, we can see that the TLT, the 20-year, has cleared a level of resistance. This is just testing the water at the moment. It doesn't signify a crash. Risk on events look like this, an exponential increase. We get these exponential increases as the markets are topping. This is not occurring right now. We have to be aware of things, but we do not panic. We can see that the 10 to 20 year, the 7 to 10, the 3 to 7, and the 1 to 3 years have all increased. Looking at bond yields, we can see that the 30-year bond yield has been decreasing. It's cleared a level of support. It's now that support is acting as resistance. Again, we need to be mindful, but we don't panic just yet. The 10-year bond yield has also been decreasing. The 0 to 5 year high yield corporate debt is not crossing resistance at the moment, not crossing support, turning to resistance. We note that there is fear inside the market now, and that's why I showed you the VIX. The VIX is decreasing in terms of fear at the moment, but we need to keep our eye on it, but we don't need to panic, especially since Bitcoin's price actually went up. Bitcoin tends to feel the problems first. Having a look at the DXY, which is the US dollar currency index, we can see the DXY upticked a little in the last session. The last time we had a market correction, the Nasdaq in blue came down, you can see it here, and Bitcoin in yellow. Notice that Bitcoin was selling off before the Nasdaq. The DXY basically came down with the Nasdaq. The Nasdaq bottomed last, the DXY bottomed first, then followed by Bitcoin. With this in mind, we're looking for a confluence of indicators, the DXY and the Nasdaq and Bitcoin, to all come down together. We're not seeing this currently. Let's have a look at Bitcoin compared with the metals. We can see Bitcoin came up, copper came down pretty hard actually, gold increased in value. We can see there was fear leaving the market. The DXY, the inverse DXY, ticked down, silver and gold going up, platinum and palladium moving with copper decreasing. Turning to the last crash, we saw Bitcoin crashing down around the 13th of March 2020. Gold also crashed. With it, the VIX, we saw a spike up in the VIX, as we've seen in previous diagrams. The inverse DXY also spiked. We can see that silver sold off. Also palladium and platinum also sold off. Basically nothing escapes a crash. It's really important, except for bonds. Bonds do, but the rest of it, they don't. We can also see that Bitcoin was the first to recover from the crash. The VIX continued up in its spike. We saw bottoms in palladium and copper just after, and then bottoms in gold and silver and the inverse DXY. Many people think that gold is a safe haven asset and can escape negative price action in a crash. You can see that's just not simply the case. Gold does decrease. However, you can see that gold did move up with the inverse DXY and the VIX before correcting. Turning now to Bitcoin, compared to inflation expectations, we can see inflation expectations, the 5-year and 10-year break-even inflation expectation rate were decreasing. They have currently been increasing. We can see Bitcoin moving in association with that. Looking back to the last crash that happened on the 13th of March 2020, started on the 13th of February 2020, we saw Bitcoin peak first. Later, the Nasdaq peaked, and the 5-year and 10-year break-even inflation rates peaked then. Then everything came down. Bitcoin bottomed out first. We can also see that the 5-year and 10-year break-even inflation rates bottomed out around the same time as the Nasdaq 100. Looking at Bitcoin compared to the airlines and transportation indexes, we can see the transport indexes were bottoming out and then increasing. We've seen a bit of weakness currently in the transport indexes as well as the airline index. Going back to the last crash, 13th of March 2020, we can see Bitcoin and the airline index peaked first. Then we saw the Nasdaq and everything else come down, transportation as well. One thing we saw is the VIX increasing dramatically in price. The first peak in the VIX hammered in the bottom of Bitcoin's descent. The second peak in the VIX hammered out basically the end of the Nasdaq and the transportation indexes decreasing. A little bit after that, they started to increase. Turning now to Bitcoin compared to Brent oil and crude oil, we can see Brent and crude oil appreciating in price, Bitcoin also appreciating. When a crash occurs, Brent and crude oil drop very, very rapidly. We're not seeing this kind of behavior right now. Comparing Bitcoin to public companies with Bitcoin exposure over the past 12 months, leading the pack, ARB, Argo Blockchain, up 2,391%, followed by Bitfarms, BitF, up 1,930%, followed by Voyager Digital, up 1,593%, followed by Marathon Digital, 1,575%, Hut 8, 12, 77%, Riot Blockchain, 845%, Galaxy Digital, 612%, Silvergate Capital Corporation, 557%, then Bitcoin, up 329%, followed by MicroStrategy, 253%, BT, Bit Digital, up 141%, ADE, the Bitcoin Group SE, up 68.52%, Hive Blockchain, down 3.59%, and Coinbase Global, down 25.98%. Comparing Bitcoin to Bitcoin ETFs over the past 365 days, out in front, BitW, Bitwise 10 Crypto, up 350%, followed by Bitcoin, followed by QBTC, the Bitcoin Fund Canada, up 311.25%, followed by 21XB, 21 shares Bitcoin ETP, up 296%, then GBTC, Grayscale Bitcoin Trust, up 205.22%, BitC, 9-point Bitcoin ETF, up 45.49%, GDLC, Grayscale Digital Large Cap Fund, up 44.41%, CoinShares Physical Bitcoin, BitC, up 24.47%, then Purpose Bitcoin ETF, down 13.08%, CI Galaxy Bitcoin ETF, down 15.37%, 3IQ CoinShares Bitcoin ETF, down 16.74%, EBIT, the Bitcoin ETF, down 17.11%, OBTC, the Osprey Bitcoin Trust, down 71.56%. I'd like to thank the very kind and generous members of our community who reached out and bought me a coffee on buymeacoffee.com/cryptotradingks. I very much appreciate it. I hope you found this content useful. Please reach out and let me know if you would like me to cover anything else that can help the community. Please consider sharing and liking this video. Thank you to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.